What is going on, everybody? Happy Friday morning. Welcome into our latest Trade to Black podcast. I'm your host, Shad Dales. Had about 24 hours to process everything. And again, I know I mentioned yesterday morning. What'd you all think of that interview with Kim Rivers? I thought she was great, really outlined some interesting things as she indicated onward with her new THC hemp-derived beverage. Cureleaf obviously I don't know if you guys saw the news yesterday, but they've actually increased their position with Select Total Wines, 100 locations. So it looks like, as we've said from the early days of 2025, hemp is going to be a hot topic for these cannabis space among these top MSOs, and we're starting to see that already. But today's podcast, as I've said, we look at a lot of top line numbers in a lot of these latest financial earnings, such as revenue, gross margins, adjusted EBITDA. But today we want to dive in a little bit deeper. This is going to be a very walkthrough educational piece on what you should be looking at as far as key metrics during this earnings season. Why are we doing this now? Because we know this is a year, a moment of truth for a lot of companies. Yes, revenue is important, cash flow is important, but so is debt. So is tax liabilities. These are things that we need to be paying attention to because we're starting to see the top 3 to 4 companies are widening the gap in this space. So this is going to be very educational, important for you to understand. So with that, let's welcome in the CEO of NewLake Capital, which trades on the OTC under the ticker symbol NLCP. Back to the show. Good friend of the podcast, Anthony Coniglio. Good to see you.
Good to see you, Shad. Happy Friday.
Yes, I'm interested. I'm buckling up. You guys are going to teach me a lot and hopefully our audience a lot here this morning. As well, we're going to welcome in CFA from Viridian Capital Partners, Frank Colombo. First time to the podcast. Good to meet you, sir. How are things?
Great. Thanks, Shad.
I appreciate it.
Glad to be here.
Yeah. And I know, look, first off, before we get into like kind of the, I guess, specifics of this show, Frank, I'd like to ask you first, what was your first initial thoughts of the numbers that GTI and TrueLeaf reported in the last 24 to 36 hours?
Well, there are clearly surprises on the upside. Both of them beat expectations pretty soundly. I think that, TrueLeaf doubled down on their tax position, that they are going to continue to book uncertain tax liabilities. There's no change there, despite kind of the change in the overall feeling in Washington, D.C. That was kind of what we expected. We didn't expect any kind of reversal there, but she did indeed kind of double down on that position. And it's a big deal for them when we look at the cash flow numbers.
Yeah, we always talk about cash flow a lot of times on a lot of our interviews, Anthony, but I have to ask again, before we get into specifics, do you think we're starting to see a trend where I know we talk a lot about tier 1, top 5s of the companies. Do you think that could be shrinking in the next few quarters as we progress here in 2025 and be maybe the top 3 or 4 companies?
Yeah, listen, this is going to ebb and flow. And I think you're going to see, yes, you do see this widening. You see the ones that have really performed well. They're going to continue to perform well. But, some of the other ones could catch up. Some of these could fall. I mean, if you look back 4 or 5 years ago, there were some companies that would have been talked about in the top category that aren't there. What that really reinforces is the fact that these businesses are dynamic and they require a continued focus on the evolving landscape that they operate in. And so there is no finish line per se in business. There's just a series of objectives for people to go after and respond to their market. And the names that you've mentioned are doing a really, really good job in managing their business, managing their balance sheet, managing their cash flow.
Yeah, and good point. Well, as I said off the top, wanted to have you guys on because I know the goal here this morning is to really understand and highlight, key metrics that investors need to be paying attention to that goes beyond just the top line revenue growth that doesn't always translate to financial stability. So Frank, I'm going to begin with you. When we look at companies like GTI, Verano, and TrueLeaf and their latest numbers, what financial metrics should investors be focusing on beyond just revenue and gross margins, in your opinion?
Sure. We've already touched on this. Cash flow from operations is the key. It's a very fundamental number because no matter what you do with your accounting policies, you change your inventory management, accounting, you change your depreciation, cash flow from operations stays the same. I think what I'm looking at is to what extent does that cash flow from operations really depend on the 280E deferrals? And when you look at, TrueLeaf, for instance, and you say, okay, the cash flow from operations, 31 million for the quarter, looks really, really strong. But if you back out the amount of extra, 61 million of extra uncertain tax liabilities, you're looking at a negative number.
Right.
So the difference between GTI, 43 million after paying all their taxes, and TrueLeave, which is still a very strong credit, as Anthony said, but you're looking, if they paid their 280E taxes, they would have negative cash flow.
Right.
Same with Verano. They booked a pretty healthy looking cash from operations, but it would turn from a positive 44 to a negative 33 if you stripped out those taxes.
Yeah.
So, it obviously, it is cash for now, but fundamentally getting into the next thing to look at is debt. What's happening with debt.
Yeah.
And personally, I view these tax liabilities as debt. It's basically the companies are making a clear decision. We're not going to pay our 280E taxes. We know we're going to have to pay the government interest and penalties for that. But it's, we view it as a cheaper way to finance ourselves, maybe the only way to finance ourselves for some of these companies, than what the market would provide. So I think when you look at debt, you have to say, what does debt really mean here? And I look at these uncertain tax liabilities and their other accrued taxes and say, every company is going to have some amount of taxes, accrued taxes. But when you get to be like, beyond a quarter's worth of accrued taxes, that's not taxes, that's debt.
Yeah.
So I think you need to look at that. One thing Anthony and I disagree a little on is do you count leases as debt? And I do. Anthony doesn't always, or maybe never. I don't know. But I think when I look at a company's balance sheet, I take those operating leases and add them into debt.
Gotcha.
And particularly in cannabis, because a lot of times those leases are on mission critical facilities that company can't really do without. So it's not as though they can just walk away from that lease and say, kumbaya, we're good. They can't. So PharmaCann is a clear example of that with their recent settlement with IIPR. So
we look at cash flow, debt obligations, tax liabilities come to mind. I think I was listening to the earnings call yesterday. It sounded very much like Kim Rivers was talking about rescheduling was going to take place. And, I think in her case, obviously, I think many companies, obviously, in that space, obviously, are hoping for that. But Anthony, like, for example, as Frank highlighted some really good points here. Verano, they just reported a $342 million net loss in 2024, despite having strong gross margins of 49%. GTI, meanwhile, at the end of the year had 195 million in cash flow from operations, another 171.7 million in cash reserves, putting them in a much stronger position. These are two companies operating at opposite ends of the spectrum. So from a capital markets perspective, in your view, like, are these companies prioritizing financial stability, or some still chasing revenue growth at all costs? Like, how do you view it?
Yeah, I don't see anybody in the sector really chasing revenue growth at all costs here. I think a lot of people over the last 18 to 24 months have thrown that strategy overboard for the most part and really have focused on operational excellence. But I want to go back for a moment to Frank's points that he was making, because I think this is so critical for the people that follow this sector. That you can't just look at the headlines. If you go back through what Frank just talked about, Frank's peeling back the onion. It's what we do here at NewLake too. You have to get behind the numbers. You have to read through the supplemental schedules. You have to read through the footnotes to really understand, because if you look at the operating cash flow number that somebody reports without understanding, did they get there because they dumped a bunch of inventory, they generated $15 million from inventory, or did they use $15 million of cash to build inventory? These are all the components that allow you to get a fix on this industry. And then layer on those items that are truly unique to analyzing the cannabis industry, like this 280E analysis around taxes. It's really very different than looking at other companies. So it's critically important, if you want to understand the financial health of these businesses, where they are today and where they might be going in the future, you have got to deconstruct these financials. You've got to look at these supplemental schedules and read through the footnotes. I do want to make a comment about debt. Debt is not bad, okay? Just about every company in America has debt on its balance. It's part of the capital structure, right? And so sometimes when we talk about having debt, it's viewed as being very negative. It's really the amount of debt that one company has that really will dictate, is it too much debt or not enough debt? And that debt should be sized for the balance sheet and the relative cash flow performance of the company. So I want to get us a little bit away from always treating debt as negative. And with respect to leases, I'd say with Frank, we agree, but we also disagree. The reason we don't always add the full amount back is because these amounts are due over time. And yes, you do have to pay them on a monthly basis, but they don't come due the way a tranche of debt does, where you have a maturity date where I borrowed 150 million and it's due on a particular date and you have to refinance it. But it is true, we do look at those as obligations. To hammer home this point, sometimes when you look at the cash flow statement, you'll see lease liabilities being not coming through the operating cash flow line. You'll see them coming through the financing cash flow line. Okay. And that is because the GAAP, generally accepted accounting principles, GAAP requires you to classify leases either as operating or financing. And we don't need to get into that. But if it's financing, then those cash flows come out of the financing section. But for us, we sit there, just as Frank pointed out, they have to pay those every single month. It's really more of an operating expense. So that would be an adjustment we would make. So I'll wrap up this whole commentary by saying, I love talking with Frank. I think we see eye to eye on a lot of stuff. I love the way him and Viridian analyze the sector. If anybody doesn't follow their stuff, I totally think you should. But also to say debt isn't bad, and reinforce this message. You got to get behind the numbers and really understand the details in the financials.
Okay, so you look at leasing basically as debt. You look at debt as a good thing, Anthony. So before we go more into detail into that,
debt can be an appropriate component of the capital structure. It has to be sized appropriately relative to the balance sheet and cash flow of the business.
So how do you assess whether a company is structuring these deals in a way that strengthens their long-term financial health rather than just providing, I guess, short-term liquidity?
Yeah, I think you have to look at what the use of funds are and the ability of those funds to impact the overall cash flow profile of the company after they have to pay this debt expense. Quite frankly, when you look at most of the debt activity in the sector today, it's really activity that deals with the debt that was raised years ago. I don't see a lot of companies raising incremental debt today in order to accomplish a financial or strategic objective. Most of this activity is related to refinancing debt that was taken on years ago to pursue the platform and the geographic build outs that occurred in 21, 22, and then into early 23.
Frank, you want to add to that?
Yeah, I do. And I think going along with Anthony's point, does it add to the value of the company or not? Well, it depends on what that cost of that debt is.
Right.
You know, if you look at some of these deals, recent deals, I won't name names, but one that happened last week, okay, there's naming names. You know, if you figure out what the warrants and the OI original issue discount and the coupon and everything, you put all that together and say, what was the real cost of this financing? You know, there's $5 million that was essentially taken out at around a 27% effective cost. Okay, and so you say, what kind of project could they have that they would invest that money in that makes sense at 27%? And the answer is virtually none. You know, there's really one use of funds that justifies 27% cost, and that's survival. You know, I mean, it's like maintaining liquidity. You know, paying off debt that's coming due. That's a survival use of funds. That's not an expansion or grow the business use of funds.
So that,
you know, when it comes to survival, any cost is justified, but you know, it doesn't add to the value of the company.
Yeah. Well, when I look at, you know, Anthony, you made some really good points. You know, when we look at, there's a lot of retail investors that are looking at some of the tier 2 companies right now, and they see, well, there's great upside potential in the event that we get some sort of reform. But if there's 1 to 2 main takeaways on how you analyze, let's say, the tier 2 companies versus say the tier 1 companies, some of the companies that just reported their latest earnings, which were very decent, what are those things that stand out to you?
Yeah. First off, just look at what's called the quick ratio, or just quite simply analyze the current assets versus the current liabilities. Do they have enough current assets? And that would be cash, cash equivalents, inventory that can get converted to cash, accounts receivable. Do they have enough assets to pay off their current liabilities? Kind of start there. Then you look at the cash flow and you try to understand, are they negative cash flow? If they're burning $6 million a quarter and they have $12 million on the balance sheet, guess what? Unless they do something dramatic, they're running out of cash. And then you look at the maturities in the balance sheet and go to the footnotes. The footnotes are a treasure trove of information. Read through the footnotes around the liabilities and understand what's going on with those liabilities. When do they come due? Because if you have a company that has some long-term liabilities that are now within 12 months, that puts them in the short-term category, means they have a more immediate need for assets, for cash and for refinancing. And do they have the ability to refinance? And what we see, and we've seen it for the last few years, is many of the companies have to dilute equity shareholders in order to gain approval from the debt holders to extend or to modify the terms. And so by understanding all of those, you're going to have a better sense for the potential impact on equity from having to take care of those debts.
Yeah. So the takeaway here, review
I would
footnotes. Go ahead, Frank.
I totally agree with what Anthony said. And I think it really comes down to like almost a fundamental redefining of what does it mean to be a tier 2 company versus a tier 1 company. And I've been singing this song for about a year now, which is credit analysis is the new equity analysis.
Okay.
Which means that tier 1 companies are strong credits, in my view. They're companies that will withstand the pressures of this environment. And so it doesn't need to be like a really big company. Like, for instance, I think company Grown Rogue has consistently mapped into one of my top 5 credit choices in my modeling. And they're not a huge company, but they are one of the best credits out there. So I think they're going to be fine, whether 280E gets dissolved or not, whether banking reform happens or not, they're just going to be okay. In fact, they're better than okay. They're prospering. Some of the companies that fall further down the ladder, Cannabis was obviously one of them, but even companies like TerraSand is quite a ways down my list of strong credits. So, it's a very popular equity, trades pretty well on the equity side. Yeah. But from a credit point of view, I don't view it as strong, anywhere near as strong as like they're not in my top 10.
Okay.
Let's put it that way. So,
well, that segues into my next question. There's a great comment here by one of our followers, Jungle Java. She writes, I'm curious if Frank has thoughts on whether or not the focus on the biggest operators sometimes leads folks to overlooking excellent smaller operators, such as, for example, a C21 Investments. That's a great point. What are your thoughts on that?
Absolutely. And now I think there's a reason why this happens, because those big companies are more accessible. One of the ways that retail investors play in this space is through the MSOs ETF, right? And if you look at that, that's 70%, GTI, TrueLeaf, and I think Verano is the third. So naturally they focus on those names, and I think the other reason why it kind of makes some sense to focus on those big names is if banking reform really happens and institutional capital comes into this space, where's it going to go?
Right.
And I think arguably it's going to go to those big names.
Yeah.
So there is some reasonable justification for why people do focus on those names. But I go back to Grown Rogue, and I think C21 is another good example. Positive cash flow companies that are going to be fine in pretty much any environment. And by the way, they're not fine because they're operating in easy environments. C21, Nevada is not a nice market. Grown Rogue, Michigan is not an easy market.
No.
So, when you see companies like that are doing well in tough environments and producing cash flow, I think retail investors rightfully ought to be looking more for those. Unfortunately, there's just not that many that fit that bill of like nice little companies that are, financially sound and operationally doing well. It's tough to find those.
Shiny things is what this industry, I think, attracts a lot of times when it comes to the investor community, Anthony. And I know your background working in Wall Street for a number of years, but, I don't think we talk about this enough. But in the event there is some sort of reform and the door comes knocking, when these institutions are looking underneath the hood, what will be the first couple of things that they're going to see? To Frank's point, we're going to see a lot of allocation to the big boys, but at some point they probably will dip their toe into some of the smaller companies. Saying that, what is going to be the first couple of questions and things that they will review?
I think they're going to be looking at a lot of the things that Frank and I have been talking about. The very first stop is going to be the financials. They're going to want to understand the financial health of the business. They're going to want to understand what that liability profile looks like before they make an investment, because they don't want, if they're going to go into equity, they don't want to have any risk of dilution in the future if there's issues in the debt part of the stack. So they're going to look first for those financially healthy companies. Also, these larger institutions, if they're going to look at a smaller company, it'll only, in my opinion, only be in the context of a roll-up strategy. If they're going to put capital to work, they're going to want to do it in size, and they're going to want to do it into those higher quality companies that can potentially utilize their capital strategically to maybe consolidate other parts of the industry or other sectors.
Good points. Let's now switch to another topic I want to talk about. We just touched on cash flow, share buybacks, and mergers and acquisitions. I want to go through an example, and we'll start with you, Frank. Green Thumb, they had cash balance of 174 million, which increased by 24 million investment in consortium, but their year-end cash remained at 172 million, despite generating 43 million in Q4 cash flow. So in that example, walk us through, like, where does the cash go in that example? And are companies, again, allocating this effectively? In this case, Green Thumb Industries.
Well, I mean, with Green Thumb, you mentioned it already, share buybacks.
Yep.
I think they had something like 40 million of share buybacks in the quarter. I don't have the exact number in front of me.
It was 43 million. Yeah.
Okay. So you have to look at that and say, a lot of people are really negative on share buybacks because they think, well, why aren't they using the money for capital spending and expanding their operations? But I look at it a little bit differently. I look at it and say, Ben Kovler has informational asymmetry. He knows more about the prospects of Green Thumb than any of us do, and any of us can do. And so if he thinks the best use of his cash is to buy back stock, I respect that. And he has the financial strength to do it. So, if you're in a precarious financial position and you're buying back stock, you're basically using the debt holder's money to do it. So that is not a great strategy. But I think he was very clear in the earnings call that they are definitely looking to do step up M&A. And I know they're looking at a number of different markets in M&A. So I think that there's a radical difference. Like if you look at Glass House.
Yep.
Glass House announced that they were, selling stock, not buying in stock. And it makes all the sense in the world. Both of these positions make total sense. If you look at the multiples that Glass House is trading at versus GTI, it tells the whole story. GTI is trading below intrinsic value. I'm not going to say Glass House is above intrinsic value, but their multiples are like 6 points over everybody else's.
Hence the reason why they sold.
Yeah.
If I'm Glass House, I'm not only, I'm going to say, how much stock would you like to buy at this price?
Right.
I'll sell you all you want at this price. Whereas, GTI has exactly the opposite situation. It's like, it makes sense for them to be buying back stock.
Great point. It's a great
Chad,
point.
I'll chime in here if I can, as a guy that also, I'm in the seat to make these decisions, and we've done share buybacks. And so pull back and provide context to people. As when you're running these companies, we have a fiduciary responsibility to be judicious with the capital that our shareholders entrust us with. And that is constantly thinking about how you deploy capital in a capital efficient way and what you do with the excess capital you have. What are your investment opportunities? We shouldn't be sitting on excess capital that can't provide an adequate return for our investors. It's really a fiduciary responsibility to deliver that back to investors, either through dividends or through special distributions or through buybacks. But it's a judgment call, right? And so we're all sitting here every quarter looking at the value at which we could generate with our capital, what we want to do in terms of paying down debt, and what you could potentially do in terms of buying back your stock. It's a very dynamic conversation, and there is no formulaic absolutely right or wrong, because as Frank alluded to, this is really about what are the prospects with the capital that you have. And sometimes those buying opportunities, like we at NewLake back in 2023, we bought back a meaningful amount of stock because the value of that stock relative to the yield to our investors versus doing new deals, it was a no-brainer. Like, I don't have to worry about getting rent on buying back stock. It was just a no-brainer. We created significant value. And so it's a constant balance is the point I wanted to make. But it's an important responsibility for all CEOs to be making that decision on a regular basis.
Does this not seem like a lucrative time given what current share prices are? Because to your point, Frank, look, these CEOs, they know the prospectus of their companies better than anyone. I had Kim Rivers on yesterday. I think the debt that they now owe is above $400 million. And I asked her, like, do we see a share buyback at some point, knowing that, you know, she's going to understand where not only her company, where the industry's going, or do you start paying down some of this debt? There's a lot of moving parts right now because there's obviously rescheduling up in the air. And I'd be curious to see how much information some of these executives know as to what's going on in Washington. But in this case, would this not be a lucrative time for these companies to do a buyback given the current share prices that they're trading at?
Yeah, I'd say, go ahead, Frank.
Yeah, I mean, once again, it's very situational specific. I mean, if you look at a company like Schwazze, Medicine Man, I mean, their stock has traded to almost nothing. You know, it's like $8 million of market cap. And yet, if you look at analyst projections of what their EBITDA for 2025 is, they're doubtlessly wrong because, you know, they haven't filed current financial statements. So there's an information gap there. But if they're even close, let's say they're 20% off in their projections, there's enough cash flow there to actually do a buyback of this company, like an LBO, an honest to God LBO. Because the stock is trading so cheap. Now, most companies don't fit that bill. Most companies, I don't see anybody else that could actually finance a real LBO in this industry. Right. But some amount of excess. I'm sorry?
It's situational, is what you're basically saying. Yeah,
totally,
I get it.
Totally.
Yep. You also could buy back debt. And so what we've seen in this sector is for those that have bonds that trade, sometimes those bonds trade at a discount. So it doesn't always have to be buying back stock. It could be retiring debt at a discount. So if you issue a bond and it trades at par, let's say you issued $100 million and it trades at par, theoretically all that debt's trading at 100 million. If it was trading at 80, then it would be trading at a value of 80 million. In my theoretical example, if you could go back out and buy and raise $80 million, you could retire your 100 million of debt for $80 million. And we've seen some companies in this industry be able to buy back portions of their term debt at discounts, and sometimes meaningful discounts, and that creates value for shareholders. So those are all the things that the management teams, and I have no doubt that CFOs and CEOs and management teams across the industry are looking for those opportunities.
Yeah. Well, saying that, let's segue into our last segment, which is debt restructuring, financial outlook for a lot of the companies. We all know the 280E tax code remains one of the biggest financial burdens for the industry, which, as we know, however, there's also another hurdle facing companies right now, which is debt management. Companies like GTI and Trulieve, they've remained strong. Others have been forced to take more drastic measures. And one of the more interesting cases was the announcement from yesterday involving the Cannabis, which announced a major debt restructuring under Canadian bankruptcy proceedings. So, Frank, I'll begin with you. Before we dive into the tax implications, let's talk about the Cannabis restructuring. What does this mean for the company? And I guess maybe the industry as a whole. Is this a sign of things to come if more and more companies are able to do what they did yesterday?
Yeah, you know, it's both a sign of things to come and kind of a reflection on deals of the past. I mean, if you look at this Cannabis deal, it looks a lot like what Air did at the beginning of 2024.
You're right.
You know, they're giving away 25% of the equity, just like Air did. They're pushing out their maturities, but not reducing their debt, just like Air did. You it's a costly thing for them to do. They're giving away 25% of their stock. Okay. And Air did it exactly that way. So it is not a cheap refinancing, but I think the value to them in terms of, let's live to fight another day, is extraordinary. I mean, I have this option methodology where I used, to try and value stocks as an option. And Cannabis is clearly one of these companies that's trading as an out of the money option.
Okay.
Right? Their liabilities exceed the value of their assets, arguably. Okay. So if you look at a stock like that, what makes that stock go up? There's two things: maturity time, the time to run before they have to pay back their debt is a big one, and also volatility. Those are the two things that drive a stock like Cannabis in this environment. So and what they've just done is meaningfully push out that maturity, and it should have a pretty meaningful impact on the stock value. If you just say you're an out of the money option and you just pushed out your stock by, the maturities by 2 and actually option to go to 3 more years. I did some work last night and said, if nothing else happens, what should that be worth? And to me, it's pretty meaningful. I could see the stock going from like 5.5 cents yesterday to like 14 cents just on the value of having this extended runway. So there's still going to be a troubled credit. Yeah. But they have time to work it out if this deal goes through.
So you view this as a good thing for the time being, correct?
Absolutely. And I think it's not only a good thing for them, but it's a very positive sign that, if they can do it, can Air do it? Can Jushi do it? Can Forefront do it? Can some of these other companies? I never had any doubt that Cureleaf and TrueLeaf and Cresco can refinance their debt. I don't think there's much of an issue there. Those are big debts coming due in 26. And I never had any problem. But what it says is, gee, maybe Air can do, Air Part 2. And maybe these other kind of companies that are also in this kind of out of the money option trading value, maybe they have a path to make this work. So I think it is very positive.
So Anthony, so essentially the Cannabis is, like I said, they're buying more time. This is a good thing for the time being. The question now is, will they use this time wisely? So they're kind of in some ways on the clock, right?
Yeah, for sure. We've talked on the show before about how I don't think enough people recognize the dynamic nature with which people manage these businesses. I mean, yes, they have more runway, but look at what they have done. They've been working on divesting, right? They did Florida, Virginia, right? These people aren't standing still. They're working really hard to try to manage their business, manage their cash flow. So they're monetizing some assets, trying to generate some cash, trying to make some operational changes. The fact, when you look at the complement of licenses they have, particularly take New York, we know New York is really starting to get going. So there's an opportunity for them to really operationally improve, generate some cash flow from some of these businesses, see growth in revenue over the next couple of years, and start to generate either the investable platform to bring in new investors to refinance out the old, or to raise some cash flow to pay down some of the debt, or maybe a combination of the both. But time is golden in this industry, and I think it's been a terrific deal. I was thrilled to see them execute this.
Well, it'd be interesting to see what comes next as we start to navigate in these next 12 to 24 months. But time is coming. When is Air's debt is due? Is it December 2026, if I'm correct now?
Yeah, that's right.
All right. Last thing I wanted to touch on too, we had a few people reach out. Frank, what was your take on Verano's holdings, Verano Holdings earnings from yesterday?
Well, clearly, unlike TrueLeaf and GTI, they missed estimates.
Yeah.
Right. You look at revenues, they were pretty close, only 0.6% off, but EBITDA is about 3% down from earnings estimates. So, I mean, it was a little bit disappointing. Now, the other thing that I think was interesting is on their call, they really talked about kind of like reining in capital spending. And I think going back to the point of,
you're seeing that everywhere. You're seeing that everywhere.
Yeah. But they're talking about it prospectively for 25, right? Like we're going to be tight on capital spending. They were another company though that said, look, we're very opportunistic. We're looking for accretive acquisitions. Now, saying that is of course the right thing to say. Now, the problem is, if you look at where their stock is trading, what do they have to buy somebody for it to be accretive? Right. They have to get quite a good bargain to make it an accretive acquisition.
Right.
So, I think that's where the position that a lot of these companies are in, that you say, we don't want to buy a company at a multiple bigger than where we are trading, or else it's not accretive.
Yeah.
And so that limits the M&A space pretty severely.
Want to ask you one last question as well, Anthony. It's the obvious. Like, if we rescheduling to happen and 280E were to go away, we understand obviously this would be incredible for the industry and a lot of companies. Once that does happen though, and 280E were to go away, like what do you see? I don't want to say changing, but what are trends that you think will start happening? Will we see more expansion right away? Like, if that were to take place, what are some of the key things that you will anticipate on how the industry will respond to that?
I don't think very much right away. And the reason is because it depends on what one defines as 280E going away. There's still this concept of the legacy 280E and what happens. And as Frank said, like viewing that as debt. So they're going to have to deal with that. And does the elimination of 280E get coupled with some conversation with the IRS on how to deal with these legacy debts to the IRS? Or can they win a court case and diminish those liabilities to some extent? So that's part of it. The reality is, from a cash flow perspective, though, we're already looking at these businesses outside of a 280E world. And so 280E going away, since people generally aren't paying their taxes, it's not like suddenly we're going to see the operating cash flow jump up significantly. So we're already making that adjustment. So I don't see it. I don't see 280E in and of itself sparking a meaningful change in operator behavior unless 280E going away does something else, meaning does it bring in incremental capital? Does it move equity valuations to where Frank was talking about being able to now do these accretive transactions because valuations are much higher? Does it allow them to issue equity and pay down debt if you get valuation? So it really is, it depends. We really have to wait and see.
Yeah. Well, Frank, I agree with what Anthony's saying there. Like, we won't see anything right away, but valuations will go higher. And once they do, like, what do you see in your opinion as to what we'll start to see change as far as the industry?
Well, I agree with Anthony. I don't think very much very soon, because as Anthony pointed out, these companies aren't paying their taxes now. So it's not as though they're going to have more cash flow just coming in because 280E went away. We're already seeing the impact of no 280E when you look at truly, for instance, cash flow statement.
It's a great point.
So it's not like they get a bunch of new cash coming in. Should it increase multiples? Yeah, because I think right now there is some view of stocks. There's some question mark. Will 280E ever go away? It's not just like when. It's like there's some doubt whether rescheduling is going to happen. And so I think should that push stock prices up from 5 times next 12 months EBITDA up to something more? Historically, these kind of regulatory reform kind of announcements have had huge impacts on stock. So from a trading value point of view, from a trading point of view, will it have that kind of impact? Sure. And will some smart companies be ready to hit the button and say, our stock just went up 65%, sell equity now? I hope so. I hope that window happens.
Yes.
And companies take advantage of it.
Yeah. One thing's for sure. We're going to find out one way or another. Frank, you got an incredible newsletter. Where can people find you?
The website is dealtracker.viridianca, VIRIDIANCA.com.
Great.
And if you click into that, you'll be in the website and you can navigate around and you can sign up. And if you sign up, you'll get our weekly mailings that highlight parts of the website that we've just updated. So today's mailing, for instance, talked about this cannabis.
Yeah, it was great. I love the analysis. Yeah, made me look at different things differently. That's for sure. Versus just a press release. But I really appreciate it, Anthony. Thank you for setting this up. This was an incredible back and forth educational piece, and look forward to seeing you next Friday back here on the podcast for your latest earnings. All right, sir.
Yeah, sure. Thanks very much, Frank. Always great to talk to you, buddy.
Yeah,
you too.
Well, great job here today, gentlemen. This was great. Okay.
Thanks, Shad. Have a great weekend.
Right. Take care.
Bye-bye.
All right. Drinking out of a fire hose, information there, but there was some great takeaways there, was there not? But don't look at the shiny numbers all the time. But an interesting point that Frank said too, that a lot of these companies are not paying their taxes right now. So in the event that rescheduling does take place, will it change much? Valuations are going to go up. Let's face it, when rescheduling does happen, and you'll see some interest, as Matt Hawkins said earlier this week, that institutions will start to dip their toes in, even if there's a little bit of snippet that rescheduling could come. So how that all falls into place, I think all of you, and I'm reading some of the comments right now, I hope all of you got some really good dialogue there from a lot of the questions. Jungle Java, that was a great question as well regarding C21 investments and how some of the other major companies try to steer some of the attention away. But it's all about credit score as well. And that was a great example. So saying that wraps up segment one. Let's now going to go into segment number two. Welcome in our good friend GUAP here on a Friday. Was that not amazing?
Yes, I was excited for all the cannabis investors out there like myself operating at maybe a 101, 201 level when reading balance sheets to hear that I love the panel discussion format. So yeah, that was great stuff.
Yeah, we got a lot of people saying WTF. I think it's because you shaved. Let's welcome in TDR Washington correspondent Gretchen Gailey. You like that title? How's that sound?
That's a new one. How's it going?
I don't know if you listened to that much, but yeah, really good information from Frank and both Anthony. But those two work great together, going back and forth, educating people, right? It was, I thought, really good. But most importantly, some interesting numbers and takes on what people should expect for the overall investment side of the industry moving forward. Because we all know, GUAP, as we talk about time and time again, tax liabilities and debt is definitely something that people need to be focusing on at the forefront.
Yeah, I like how Frank and AC brought, 40 minutes of nuanced discussion about it rather than just using buzzwords as scare tactics. Debt,
yes.
The wall of debt, the tidal wave of debt, the cliff.
I know.
These are the kinds of sensationalized headlines we're expect to see out of mainstream media when talking about the government. So, it's best to dig a little deeper and understand it and invest in the, honestly, I've been pretty consistent about this. The strongest players are going to emerge from this. And so I'm comfortable investing in who I think the strong players are. But I like how they were sort of using air as almost like a test case to understand, how capable these companies will be. What's the appetite out there for refinancing debt? So,
well, it was pretty impressive
stuff to me as well.
It's impressive too, in how they viewed about the job that Cannabis did by pushing obviously their debt out, and we'll see that if we see that a little bit later on. But look, they focus on reading financials, footnotes, and understanding the financial side of the industry. Gretchen, you focus on cannabis reform in Washington, and that's what you are really good at. And I wanted to highlight a few things and have you on here this morning, including John Fetterman, Senator John Fetterman from Pennsylvania, who this week is circulating a petition, to legalize marijuana at the federal level, urging people to sign a petition to show, quote, just how much support he has on the issue. So there was an email blast that was actually last week on Saturday where the senator's team said, quote, John stands firm in his beliefs and is, quote, proud to be fighting for legal weed, among other issues such as healthcare reform and labor unions. So first up, how important is this, and should the cannabis community read much into this?
The actual petition?
Yeah.
Nothing at all. This is all campaign tactics. He's gathering emails so he can ask people for money down the road. Sure, this is what folks do. This is what politicians do. I'd prefer he put his back into it and actually maybe sponsor some legislation for actual cannabis reform. I mean, John Fetterman is my senator from Pennsylvania, and he was a huge proponent of cannabis when he was the lieutenant governor of Pennsylvania. He even flew a cannabis flag out the window of his state house office. Everyone knew where he stood there. Since coming to Washington, he hasn't sponsored one damn piece of legislation at all when it comes to cannabis.
Can I stop you right there? Can I stop you right there? I know we asked this question. It's a pretty broad question all the time, but you are in Washington. You speak to these people off camera, in coffee shops. Why? What is the real reason? Why will they not sponsor something like this? What do you think it is?
I mean, honestly, I don't know what has held back Fetterman, because he is not your typical senator. He has definitely marched to his own drummer since he has come to town. I truly don't know what's holding him back. I would think perhaps in the last administration, he was letting Schumer and Booker and these other guys who have been the leaders of his party, take the lead. It would be nice if he showed up now and did something. When he was on Senate banking, he's no longer on Senate banking. He did speak favorably for SAFE, and he did bring it up in the hearings. So he did speak on it, but he has never sponsored anything.
They did. Is it they just don't want their name attached to something so monumental on how they viewed the history of cannabis? Is that just how it is?
For Fetterman, no. I mean, this is his baby. This is bullshit he has on his website. He is one of the few people who are like, yes, marijuana is my platform, but he doesn't sponsor it. So I don't know what the man is waiting for. Get out there, do it.
I don't understand that.
He was gonna walk right into the, in his hoodie and his don't give a crap about anything shorts, and just walk right in and light one up and be a champion for the plant. And so it's disappointing to me, right, to see yet another congressman who, I feel like they really, really get the issue. They campaign on it, and then they get to DC, and then something happens, right? So I think that's what Shad's kind of asking about. What?
Yeah.
Well, I think when it specifically comes to Fetterman, of course, we know he had his health concerns when he first showed up. So I think that definitely slowed him down a bit. But now's the time. Get into it. I would love for him to actually get out there and sponsor something, to work with folks on a bipartisan effort and really push something forward.
I know.
We know he has a good relationship with Trump, so why not? I don't get what he's waiting for.
Well, when we're in Washington with you, you hear some of the stuff and rumors that are floating around in the hallways. It doesn't really make it sometimes, some of the stuff that we talk about on air. But, a lot of the things that I heard, it's just like when you attach your name, you sponsor a bill, given the overall not legacy, but history of cannabis and the topic of cannabis. Do some of these senators want to attach their name that will be there, I assume, forever, correct?
Sure. I mean, that's definitely a concern, I would say, for some of these older members, and for folks who don't want to be co-sponsors, but they'll be a yes vote when it comes to cannabis. That's absolutely a concern. For John Fetterman, the I don't give an F, I'm not going to even wear a suit, that is not a concern. So
yeah.
I would love to see him do some more.
Here's something we should walk our viewers to as well. Like, look, you mentioned how Fetterman's no longer part of the Senate Banking Committee. 39 days ago, the Trump administration, they took office, and we've seen a lot of changes that have taken place. You outlined it last week, how there's a lot of people in government that have lost their jobs in Washington. When we switch to cannabis, it's like I said, 39 days since this new administration has taken office. What legislation has been introduced so far in Congress under this new administration? I think it's important for people to get an update on and really understand.
Sure. So there have only been 3 bills actually introduced so far that are related to cannabis, and 2 out of the 3 are prohibitionist bills. 2 of those 3 bills, one in the House, one in the Senate, although they're not technically companion legislation, would keep 280E in place if Schedule 3 were to happen. So not a good thing for all those folks who are hoping that 280E is going to go away with Schedule 3. And the basic position of these members is we should not be giving tax breaks to a federally illegal substance. That's also the stance of Tillis when he's talking about safe banking and the banking committee. So that is definitely an issue that is floating around. the halls of Congress when it comes to Republicans.
Hmm.
Now, Don and I feel differently on this, and Don and I, we do work together, but we do have our own opinions. He thinks this is a wonderful thing. He thinks if these guys are willing to put out this legislation, that means they're scared that Schedule 3 is really going to happen. I think these guys are just being their usual jag-off selves and are pushing the message that we don't like cannabis. I mean, you look at who the sponsors are. Pete Ricketts hates us. You got Edwards. You got Pete Sessions on the House side, also hate cannabis. They're just keeping this going. And we've got nobody on the cannabis side pushing back. We have nobody showing up in Congress saying that there's something wrong with this. And it drives me up a wall. Don's like, yay, this means they care. I'm like, okay, great, Don.
Right.
But if they do care, this is going to be a problem down the road. And especially if they have their way and get this through.
So be mindful here. I was going to say one last thing too is love in the media when somebody can just speak their opinion on camera. I wish you would do more of that, Gretchen.
Well, what drives me nuts, if you look at the press release from Jim Lankford when he put out his bill, Kevin Sabet is quoted in it. Hello, when is the last time that we had a cannabis advocate quoted by any member of Congress saying, yes, I'm on board with you people? Maybe because they're not doing their jobs. This is ridiculous.
Yeah.
We need to get in this fight. We need to put money behind it. GTI, jag off. Top of my list. Key jag off of I'm in business, I'm making money, and the hell with you guys in Washington. That pisses me off to no end. So you have someone like Kim on who is putting her money where her mouth is. I can't respect that woman more than anyone else in this industry. And anyone else who thinks she sucks, I don't care. She's doing what no one of these other big boys will do, and that's show up and spend some money. It makes me mad. I'm sorry, I'm getting worked up now.
No. I was hoping I was hoping for the convention with Gretchen segment to begin.
You do this.
I'm glad it took a minute for you to get going. You know, Fetterman was a nice appetizer, but I hear you.
They get me riled up. Makes me so mad.
I'm frustrated too.
Great takes.
Need money.
Well, listen, we got the greatest segment of the week, not to mention, I think yours is probably on par with what our next segment is, but it is time for that special time of the week. It's Fridays, and it's time for Mic Drop with GUAP, and we want you to stick around for that, Gretchen.
Yeah. Let's not change costumes just yet. I have let's say a news of the weird. I just couldn't pass this one up.
Jungle Java writes it's a ginger thing. That's what she said.
We are feisty.
Yes. Yes.
Go ahead, GUAP.
So, going mirror shades on this one. There was a fantastic clip on Fox Business News that I just couldn't resist.
Okay.
It's associated with the marijuana. And so we definitely, that's why it came on my news alerts, right? But a representative from a Republican, GOP from Texas, Pat Fallon, was quoted as saying, you know what? Yeah, this is on a story about SNAP benefits and food stamps and, you know, the whole played out narrative. It's almost as played out as 80s DARE campaign anti-drug stuff. The whole narrative that we've got all these people out there sucking down their entitlement program money, and that's our taxpayer money. You know what? We have a message for these kind of folks. If you're able-bodied and you want to milk the taxpayer, those days are over. Get off the couch. Stop eating the Cheetos and stop buying the medical marijuana and watching television.
Right?
Which he was on right now, which is extra funny. You're going to contribute to because American taxpayers fed up. We can't fund these federal government anymore with these kind of deficits. And then he starts to make some sense, right? You know, I just thought it's just amazing to see the sort of stigma and the classification. You know, everyone on these food stamps is smoking marijuana and eating Cheetos. Thanks, Rep Fallon. You're the best.
So the moral of this story is it ain't easy being cheesy, right?
That's it ain't easy being greasy either. Trust me. Ask Method Man on that one.
All right. Now it's time for costume time. As we all know, we got some great news this week. Our very own Mr. Anthony Varell and his wife gave birth to their beautiful daughter. By the way, I wanted to let you know, Yeah, I think it's about that time. This one's going out to you, Anthony. Yes.
That's not my hair for Anthony.
You see this, ridiculous. Anthony? Yes. Mr. What's up? 8 pounds, 9 ounces, 21 inches long. When my daughter was born on June 1st, 2013, she was 8 pounds, 9 ounces, 21 inches long. I cannot believe when he told me the numbers, but congrats again to him and his family. AV, if you're watching this, these backwards hats are for you. I wish I could grow a beard like him, but it's just one of those things I can't do.
Me too. I've tried for years. I can never seem to grow one.
Yeah.
What'd you do? You down to look like AV. I went a little far, but AV, congrats, bud.
You got some stuff there. What'd you do? You shaved 8 minutes ago?
Yeah, exactly. Welcome to the Girl Dad Club with Shad and I. We're happy to have you on board, and congrats to your wife. She did all the work, right?
Yes.
And just,
he texts me while she's in labor. I'm like, how you doing? He's just like, useless.
Yeah, exactly. You just hold her hand and tell her to breathe and hope for the best. And we're just so glad here at the TDR team that new chapter of your life is starting. And, we're going to try and pick up the slack a little bit, but this week was tough without you, buddy.
Yeah. All the best. Irish, great to know your daughter's 8. It is a great age. 8 years old. My daughter is 11 now. Big hockey game tonight. Like 1 minute you're putting on onesies and changing diapers, and then last night I see they're laying in bed, and I'm looking at just how tall she's become. But I hate when people say enjoy it because time flies, but the reality is it's so true. But anyway, it is what it is.
I used to be a baby girl.
You what? Sorry, Gretchen?
I said I used to be a baby girl.
Yeah.
Yeah, that's all I got. I got a niece. She's 6.
She's 6?
Yeah.
Where does she live?
Pittsburgh.
Nice.
Gabby Gailey.
John,
we're big on the G's.
Nice.
My boys were 8 pounds and 7 pounds. No ounces. Oh, we're out. Wow, just flat. Don't hear that too often, but yeah, it's well, let's face it, it's the greatest moment of your life. But congrats again to him and his family and his wife. And like I said the other day, baby and wife are doing great. And from what I hear, I think they're on their way home at some point today. So congrats again, my friend. Hope you like the backwards hat, and hope you get a chance to see this. Great show. I got a great, interesting piece coming out tomorrow. I know a lot of you like those 5-minute little clips I'm putting together. My next one is why Trump has pushed the whole States Act and leaving it to the states when it comes to federal legalization. I'm going to have a complete breakdown on his views on that and why it
He's
actually...
a Republican.
Right.
That's kind of our spiel. States. Right.
Maybe I should have... Actually, Shad looks like the drummer from the Red Hot Chili Peppers.
That is amazing.
Chad.
Yes, that is not bad. When Will.
Well, I got another comment earlier said I look like Will Ferrell, and I'm like, those guys. I don't know how they're not twin brothers.
They are. They did a drum off, and
I saw that.
Yeah, there's a whole bit. Yeah, they're not. CB, that had not occurred to me, and I'm really good with this doppelganger thing. Yes, exactly.
I don't know. Right. I want to feel like I. Oh, man,
we started off so serious. It's been a long week, guys. We're a little loopy.
Yeah. Well, listen, I'm going to have that. And then as well, Sunday, 4:00, I will do a recap this week of all the latest information and updates for the industry. A recap of obviously Verano, TrueLeaf, and GTI. I don't know if there's any more companies that are reporting. Next week, we got a few. CureLeaf is going to be up. TerraSyn, we're planning to have them on. NewLake as well. We're going to have Anthony Coniglio on in the following week. Interesting news. I've reached out to the cannabis people, and hopefully we can get Jesse and David back on the week of March the 13th. And yes, I keep reaching out to the Canopy Growth team, trying to get Luke on, keep you posted. I think they have some lot of stuff that they want to talk about leading into April. So if it doesn't happen in March, it'll happen in April, maybe sooner. But again, we'll keep you all posted. As well, don't forget, Village Farms at some point this month. We're going to have Michael DeJulio back on the podcast. I know some of you have reached out to me asking about him. So lots of executives on deck here at TDR. So stay connected. GUAP, Gretchen, this is Red Hot Chili Peppers saying good night, and we will see you all next week. Enjoy the rest of your weekend, okay?
Stay up, America. Stay up.
Now, that was a good one. What'd you guys all think? Did you like what we had to say here today? Do you agree, disagree with what we're saying? Love to get your feedback. As usual, leave comments below. Trade to Black is growing, and we wouldn't have done it without you. So if you haven't done so, please subscribe to our YouTube channel. You can also check us out on Apple and Spotify for the audio version. And as usual, leave lots of comments. We, as I said, love to hear back from you. Thanks again, everybody, for watching.